Good morning, traders. This is Brad Matheny. Today is Monday, the 23rd of June. This is the Plan Your Trade video for Monday, the 23rd of June. Let's go ahead and get started. We are looking at a major crush pattern. Well, actually just a crush pattern in bullish warning with bullish bias trending daily and weekly. We did have this kind of interesting pattern here, the time shift +1 till weekend, which doesn't matter because it was on a weekend. This was potentially shifting the markets forward, the patterns. A gap -1, close -1 gap trend, meaning that we would be closing a gap from 1 bar ago, meaning we look at this chart here daily. We would be looking for a gap from 1 bar ago on the weekend. We didn't really get a gap. And what we would be looking for is a closing of that gap window. And today we're looking at a crush pattern, which I am interpreting as a downward trending market move. Then we get a flat down move tomorrow, which should be moderately consolidated downward trending. Then we get a breakaway move in carryover trend. So it's really going to depend on what the markets do today and tomorrow to see what this carryover breakaway looks like. Counter trend rally, which should be a down bar, and then a rally in a trend mode on Friday should be up. So in theory, if I were to try to draw what this means to me, we get a crush pattern today, some follow through over the next couple of days, maybe down in this area and a bounce. Maybe. Okay. That would put us into 1, 2, 3, 4, 5. So drawing it a little too far out. Pretty much like this. Kind of like that. Moving down potentially into this gap lower range, which would be essentially a big breakdown of the market. And we will see obviously if this happens, but we would be breaking below these lower channels here and here on this big breakdown, indicating that we could be moving into much lower, deeper channels. Now, the war and the conflict in Iraq is going to take center stage this week. There could be a lot of news. We could see a lot of rotation in the market. And as we have seen, Bitcoin has broken down considerably over the last few days. Now, this is an older chart. I wanted to go away kind of from my previous chart, some comments about, oh, my charts look ridiculous. Well, so I'll go back to something that doesn't have as many drawings on it and show you again where we're at with this longer term. Looks like I was highlighting the excess phase peak patterns here long ago. All right, come here. There we go. Okay. So where we're at with this, we are looking at a pretty solid breakdown here in Bitcoin. Like I said, getting below this lower channel, which was really this area here, was going to be critical for our breakdown. But, the way I interpreted that was that this 102, 103 and a half roughly right in this area was our intermediate resistance. So we're below that again. We've rejected slightly off of this low. We're breaking down. We just haven't, broken away from this floor yet. So once we get away from this floor with Bitcoin right in this area, then you know what? We are going to have a fairly serious breakdown mode for the markets. I think that Bitcoin's collapse over the last couple of days, down about $6,000-7,000 off of this low. This is 98,000 from up here at 106,000. You do the math. That's about $8,000 drop on a $100,000, $105,000 asset. It's about a 6.5% drop, maybe more. I think we're looking at a pretty solid breakdown here. Given the news and given the crush pattern today, So I would not be surprised to see Bitcoin attempt to move back down into this lower range here, back to a line in the 93,000 area. And it does matter, guys. Fibonacci price theory teaches us that, these lows matter. These unique lows or standout lows that are setting up right over here, these matter. This is where price will likely try to come down to if we get that breakdown. So understand that we're talking about a fairly solid breakdown trend here, where price will likely try to come to this 93,100 level if we get this big solid breakdown that, looked like it was going to take place very strongly last night. And eventually, as I mentioned to you, you look at this chart, you can see the excess phase peak pattern that's set up here, came up, flagged, broke down into this breakdown mode. This broke below our flagging pattern here. We moved down into consolidation, and then we invalidated back to the upside. Now that sets up another big, broad excess phase peak pattern here, and we are breaking down. So now if we get below this mode here, this flagging low right down here, then we are going to be looking at potentially a very large breakdown into this area, into consolidation here, and maybe even deeper. So the excess phase peak pattern that's playing out is quite large right now. We have a little one up here that's playing out as well. You can kind of see it up here, flagging. This would mean that we would break down into consolidation here probably and attempt to move down into this low. So we have a number of, patterns that are still playing out. We have the bigger one that shows this potential breakdown. We have the smaller one, which indicates that we could try to target this low again. And we have all of these support channels on the way up or on the way down. So we're not out of the woods here. It's just going to be very interesting to see how Bitcoin plays out. And if we get that crush pattern today of buyers trying to get out of the market, then we're going to be looking at some deep selling. And that's what ends up happening in the markets with buyers wanting out, is they turn to sellers. They say, get me out. And that typically drives the price trend downward. Okay, so let's go back over to QQQ, see what I have drawn on QQQ here. Okay, we've got the same type of cycle patterns. Get rid of some of these lines. So you can see again, guys, we've got the flag high. This carries all the way out. We've got this lower support channel here. We've got this channel carrying upward. And as you can see, we've broken out of that upward channel. Okay. That's what this was designed to show you, is that we get out of this range, like right over here, and we're rolling downward right now, kind of rolled over, potentially rolling downward. Now we are off about 0.1%, not much today. We've got the crush pattern today. As I mentioned to you, the crush pattern, if I'm reading it right, could put us down here to fill this gap on a pretty strong selling mode this week. We'll see. I mean, it could come down here and try to attempt to get into this gap range. And again, here is the gap range. You can see it pretty much from here to here. I'll go up to there just because that acts as a pretty solid support level. And that would mean that a breakdown here would be a 6%, 5.5%, 6% gap to the downside or move to the downside. You can see the larger excess phase peak pattern setting up. The smaller excess phase peak pattern here rolled down into consolidation and then rolled down to our ultimate low right here. So that pattern played out. We then had the inverted pattern moving higher up to our ultimate high. We stalled below this low. or below this high. Obviously, failure to try to get back above this level means that we should move downward and try to take out recent lows. So again, we have lows here. We'll stand out low right there. We have another low back down here. And of course, we have our low right there, which I'm acting as the upper area of the flag. So we're going to see how this plays out, but I am not expecting this conflict with Iran to go away. I think it's going to take at least 30, 60 days to kind of play out. And I think that the markets are poised for a bit of a pullback. Even if you look at this from a standpoint of Fibonacci levels, you come here up to this level, we have what I call my Fibonacci trigger zones right here and right here. And so that would mean that we close this gap, the upper area of this gap, and we could easily make an attempt down on the QQQ into this 420, 430 area. Okay. If we close this window and get down into this area, we will likely try to move all the way down to this area or somewhere near the 50, 60% area, which would be right in here. Okay, so now let's go take a look at gold and silver. Gold and silver, I highlighted this. In fact, I can come back over here and highlight it. Well, actually, I could probably, I don't think I have it here. I don't, so I'll just do it again. Gold and silver during the conflict, the first conflict of the Iraq conflict, actually moved quite a bit higher. So now I want you to follow along here. This was the timeline of scale, regular scale, okay. Move to new pane below. So this is gold below, and this is the Dow Jones Industrial Average. The reason I did this because it's got a lot of data. I can go back to 1990 or whatever and show you. But look at how gold reacted. So from the beginning of the Iraq conflict, the first conflict, gold shot up about 21% and then consolidated back downward as the conflict played out. Okay. So, the concept that gold is going to sell off during a relatively short type of a conflict does not always hold up. This could turn into an aggressive move to the upside. Now, what is different here is that in the 1990s, we had seen gold move up a bit up into this area, and we had been consolidating kind of in a downward cycle trend. So we are now in an upward cycle trend that's different than this. But I do believe that there's a chance that we could see a move in metals upward over the next couple of weeks in relation to this conflict. So the reaction so far in metals has been fairly mellow. Gold opened up a little bit higher. Silver was rather flat. You're looking at a pretty tight little move here, not really doing much considering the U.S. just got involved in a war. We're breaking down a little bit. I still think that 3,300 area down here is our key support area. That's our support area down here, 3,300. Tried to draw it out earlier. But really key support right here. And I think that's going to end up being very critical for us in the long run. I think we hold above 3,300. I think we hold up here, obviously, above 33, but more than likely above 34 and a half, 35 and a half. We've seen silver make a pretty solid move off of this 37. but I ultimately believe gold and silver are going to attempt to make a big move to the upside. I don't see how this conflict negates any fear level in the markets for global traders. I think that demand for gold and silver is going to continue to skyrocket. I believe that we could see a very big move upward depending on what happens. And I think that we're just kind of playing out the news right now. So gold and silver cycle patterns are a Harami inside pattern today. We're not seeing a whole lot of trending here. We've got an inside breakaway tomorrow in trending mode, a momentum rally in counter trend mode. Could be a big news day on the 25th. And then we're looking at a trend blank and a topping pattern on the 27th. Then we have counter trend rally on the 30th, and then rally on the 1st, and then rally on the 2nd. Could be a pretty interesting week, especially with the news from the conflict and the ongoing escalation in the Middle East. So we'll see how it plays out, guys. Okay, I'm going to let you go right there, about 16 minutes. Remember, we're looking at a big crush pattern today, and that could carry into metals as well. Okay, so be aware we could be looking at a crush pattern carrying into metals, potentially driving us a little bit lower, and we'll have to see kind of what happens to the markets here. Come back over here. There's our SPY weekly and gold. And like I said, I'm really watching for a rollover, some sort of a breakdown here that indicates that the markets have had enough and we're moving into distribution. So we will see. We've got a nice incomplete dark cloud cover with confirmation on a weekly chart, really setting up a nice kind of a topping pattern. We'll see if this rolls like I talked about. But, you know, it's right now, it needs to break below. I mean, basically, if I were to tell you anything right now, that we've got confirmation on the weekly of a nice topping pattern. If we get back above this upper channel, this 605 roughly, make sure I got the number right. Yeah, 605 and a quarter. Well, then we're back to bullish. Okay. If we start taking out lows and moving downward, this is very indicative of a downward cycle trend, and really closing this gap, getting down into this 560, 570 area, in my opinion, this sets up a very solid breakdown. So I'm going to leave you right there, guys. Okay, talk to you later.